How to read a financial statement. But first, subscribe and click the bell for more notifications. We will break this down into key components and provide some examples to make it more concrete. How to read a financial statement, an overview for the general public. This video includes examples of the three primary financial statements: the balance sheet, income statement, and cash flow statement. If you have any questions, please comment, and I will answer or create a new video as soon as possible. Here are some key points to remember. 1. The balance sheet shows what a company owns, assets, owes, liabilities, and the shareholder's stake, equity, at a specific point in time. 2. The income statement reveals a company's profitability over a period, showing revenues, expenses, and the resulting net income or loss. 3. The cash flow statement illustrates how cash moves in and out of the business, categorized into operating, investing, and financing activities. 4. When reading these statements, it is essential to look for trends over time, compare them with industry benchmarks, and pay attention to significant changes. 5. The footnotes to the financial statements often contain crucial information that provides context and explains the accounting methods used. Financial statements provide crucial information about a company's financial health. The three main financial statements are: 1. Balance sheet, 2. Income statement, and 3. Cash flow statement. Let's explore each one with examples. Balance sheet. The balance sheet provides a snapshot of a company's financial position at a specific point in time. It shows assets, what the company owns; liabilities, what the company owes; shareholders' equity, the difference between assets and liabilities. Key accounting principle: assets equals liabilities plus shareholders' equity. Example: XYZ Corp. balance sheet as of December 31st, 2023 in millions. Assets, cash and equivalents: 100 million. Accounts receivable: 50 million. Inventory: 75 million. Property and equipment: 200 million. Total assets: 425 million. Next liabilities: accounts payable 40 million. Long-term debt: 150 million. Total liabilities: 190 million. Next, shareholders' equity: common stock 100 million. Retained earnings of 135 million. Total shareholders' equity: 235 million. Total liabilities and shareholders' equity: 425 million. The income statement shows a company's revenues, expenses, and profitability over a specific period, like a quarter or a year. Key components include revenue, which is the money earned from sales; expenses, which are the costs incurred to generate that revenue; and net income, which is the profit or loss after subtracting expenses from revenue. For example, look at ABC Inc.'s income statement for the year ended December 31st, 2023 in millions. Revenue $500 million. Cost of goods sold $300 million. Gross profit $200 million. Operating expenses include sales and marketing at $50 million. Research and development at $30 million. And general and admin at $40 million. Total operating expenses come to $120 million, leaving an operating income of $80 million. After accounting for interest expense of $10 million, income before taxes is $70 million. With an income tax expense of $17 million, the net income stands at $53 million. The cash flow statement shows how cash moves in and out of the business over a specific period. It's divided into three sections: operating activities, which is cash from core business operations; investing activities, which is cash used for long-term investments; and financing activities, which is cash from investors and creditors. For example, let's take a look at LMN Corp's cash flow statement for the year ended December 31st, 2023 in millions. Operating activities: net income $60 million. Depreciation $20 million. Changes in working capital negative $5 million. Net cash from operating activities is $75 million. Investing activities: purchase of equipment negative $30 million. Sale of investments $10 million. Net cash used in investing activities is negative $20 million. Financing activities: issuance of common stock $40 million. Payment of dividends negative $15 million. Repayment of long-term debt, negative $25 million. Net cash from financing activities is $0. The net increase in cash is $55 million. With cash at the beginning of the year at $45 million, the cash at the end of the year is $100 million. Here are some tips for reading financial statements. First, compare multiple periods to identify trends. Second, look at ratios, like profit margin and debt to equity, for deeper insights. Third, read the footnotes for important details and accounting methods. Fourth, consider industry benchmarks for context. And lastly, pay attention to significant changes and understand their causes. Remember, financial statements tell a story about a company's financial health and performance. With practice, you'll become more adept at interpreting this story. Please thumbs up and thank you for watching.